Hello, and welcome to new update from the Markets Middleman. Today is April 5, and I want to wish everyone a happy and beautiful Easter with your friends and beloved ones. So I haven't made an update last week simply because there was really nothing on my mind and there was not a clear structure, especially with the wild swing highs and swing lows that we saw. But I think this case is soon gonna be over, and a big breakout is gonna take place on the XY as well as the other Forex market. So, following up with what I last mentioned in the last update, is that the DXY had been trapped within this range since last year. And after the interest rate that we saw during January, everything changed and we shifted into a bullish market, especially after closing above this weekly breaker, as well as closing on a weekly and daily closing basis above this previous buy side, which confirmed a weekly, daily, and hourly break of structure to the upside. So of course, we're not gonna buy at a high point, but this candle close indicated that there's potential for a push to the upside. We anticipated a push down to this weekly fair value gap, but price got enough from sweeping last week's low. So if you see, it's been 3 weeks that price had been trapped within those kind of range. And I think the breakout to the upside is inevitable. It's just a matter of if price would still manipulate lower and then push higher, or it's just gonna break the structure straight to the point. If I go into the daily time frame, there's really just two simple scenarios over here. And this consolidation, you see those kind of days, it made it really challengeable for us to trade in a single direction. It was very aggressive moves, and I couldn't see a well objective close above this previous buy side. So this was the first time price does not change or continue the break of structure. So this is why I just backed up a little bit from being short on EUGU or long on DXY, simply because I couldn't see a clear break of structure to the upside, and instead it looked more like a sweep than a break of structure. But with those 2 days, I mean from Wednesday, Thursday, and Friday, buyers seems to step back in. Now it's still, if I just scale down to the 12 hours, since there's a little bit more information than the daily, there's still not a clear objective breaker that was broken. There's just this gap that was filled, leaving this 12-hour fair value gap over here. So I'm gonna make it simple from here, okay? Since I'm overall bullish, I'm gonna be convinced if I see a 12-hour close above, and I would consider this to be a breaker or a 12-hour order block for any potential retracement. And my job as a trader is to upfront or to, sorry, front run the potential break to the upside if it's going to occur. So let's say first scenario, price breaks to the upside, retrace back into this 12-hour order block, and I'll be targeting this buy side and of course a mid-range throughout the overall target, which is the monthly fair value gap. And if I see price displace sharply lower during next week, I'll be waiting for a sweep to this sell side and mainly this sell side as well. I mean, those kind of markets are crazy, especially with what's going on with the war and the situation with federal interest rate and really what happening around the globe. So I wouldn't be surprised if I see still one more manipulation to the downside, but noticing how things are going and how prices really rejecting any kind of bearish momentum, I think a break to the upside is more realistic. But again, I just place out some narratives, some potential narratives to next week, and I just be prepared for any potential scenario that will happen. So as you can see, DXY is still trending higher within this channel to the upside. This is just telling us that there's more higher lows being printed out on the DXY and higher highs as well. Now this is an exception, but we're gonna see if this is gonna be the sweep and market would sweep a sell side or just continue higher. So overall, I'm definitely bullish on the DXY, and I wouldn't hesitate to be aggressive in case I saw a break to the upside on the 12-hour time frame, and then join buyers in a pre-breakout trade. So this was for the DXY, and right now it's time to see what EU-GU are telling us as well. So just in case you haven't watched the previous updates, then this is a quick reminder that on EU I'm extremely bearish. And especially after this week that came after sweeping a major significant buy side, which is 2025's high, tapping into a weekly bearish fair value gap, the last fair value gap within this push to the downside, and obviously closing not only about below, sorry, this weekly breaker, but also below the sell side, confirming a significant break of structure. Actually, it was the first time price breaks the structure on the weekly time frame after making higher lows, and right now made its first lower low. So we had this weekly fair value gap on our mind, but again, price was or got enough from sweeping this week's high. And again, same as the XY, it's been like a week, two, three of consolidation. So if I go into the daily time frame, sorry, just before the daily time frame, I see that this was the breaker on the weekly time frame, that price doesn't seem to care about filling this weekly fair value gap, and it could potentially be ready to push lower, making this external low as the objective. So the low of this week, first week, I think first or second week of March, as well as sweeping this sell side. I think this is the next objective, and of course the medium term objective is this sell side, and the long term objective for 2026 is to complete the whole narrative and this downtrend. So on the daily time frame, what is the daily time frame telling me? You see why last couple of weeks was a little bit challenging. There was only like an intraday narratives, but on the higher time frames, it was really tough to identify a clear market structure, especially after those 2 days over here. There wasn't enough momentum with those days, and just like really last week, sold off from a very random level, except the fact that it was just an optimal within this leg to the downside. But all of this remains bearish because the external high to the external low was still safe. So price couldn't close above this level or couldn't even target this level. So this keeps the overall bias extremely bearish on EU. So again, after all of this consolidation, I think the breakout is going to be aggressive. So if we're about to see a break of structure to the downside, I think we're going to see something like this, a continuation in the trend, especially that price had been trapped since mid of March. So since mid-March, price had been trapped within this range, and I think soon we can see the full break of this consolidation to the downside and the continuation targeting the draw on liquidity, um, as I mentioned before, the sell side and the sell side as well. So what is the playbook? What is my plan for next week? There's really two scenarios, okay? If I see price pushes higher, taking this 12-hour fair value gap, then I'll be looking for shorts around this level. But with how the last 12-hour candle closed and how the last day closed, let me check real quick. It couldn't close below the low of Thursday, which is fine and still within this bullish daily fair value gap. But this daily fair value gap isn't so important. Why? Because it's not coming after a displacement. It's just coming randomly within swing high, swing low. So such fair value gaps have low probability to work out. So I'm gonna avoid this daily fair value gap for now. So once I see if Monday opens and closes bearish below the low of Friday, then of course we're gonna be joining sellers on, let's say, a continuation module. So we're going to be looking at such levels, okay? Order blocks, continuations from a fair value gap, something similar to last week. Again, break of structure, retrace, very simple module, 6 hour order block beginning of last week. So really, we can actually use this pivot over here or this 2 hour structure for our advantages. So in case I see something like this, a displacement to the downside without reaching this sell side first, I might be using this level over here as a break of structure, retrace, and then a continuation lower. And in case price wanted to sweep Friday's high, which is the 12-hour fair value gap, I'm going to be highly observing for a market structure shift and then displacement to the downside. So it really becomes simple when you have a playbook that can guide you what to do based on a confirmation level. So this is it, really simple. Main objective is super bearish. I expect a continuation of the trend to the downside starting from next week. So we're gonna see how Monday opens, and then we're gonna react based on what price is telling us. So moving forward with GU, I think GU have, of course, taken the last week's high, and I'm talking about the previous week, and didn't even want to test this weekly high even. So it got enough sweeping this week's high and then just displacing lower. And I think GU had resumed, had already broken this consolidation on the weekly time frame. Why? Because this week over here was able to close below the low of last week. Notice this week over here closed below, and the high wasn't taken. The high was always protected. So the low had tendency to be taken before the high, and really the high was protected. Let me zoom in a little bit. So I think moving forward into this week, also closing below the low of this week as well. So this last week's high, I think it should be protected simply because we saw the close below this week. So I think a continuation to the downside into those two relative equal lows, we're gonna see it very soon, either this week or the week ahead. So depends on the momentum, of course. So moving into the daily time frame and confirming that we are heavily bearish on GU. Look at this consolidation over here. What confirmed the breakout of this consolidation isn't like a clear push to the downside rather than just the weekly close. This is why when you zoom out, you condense the information that you have. Sometimes it's better to condense the information just to confirm such a higher time frame confirmation. And at some point for trade setups, it's better to zoom in and divide the candles into more information. So it depends. For bias and direction, it's better to condense the candlesticks, and for trade setups it's better to divide them so that you'll be able to be more specific with your areas of interest and to trade the narrative. So moving on to daily time frame, closing below this daily order block, so this could become the first potential retracement. I mean, with such heavy price action, we could just see a small minor retrace from Monday, so this could become Monday's high and then just continuation to the downside. So I wouldn't be surprised if I see an aggressive up into the week, especially that next week we have a lot of big news such as the PMI, good stuff like that, FOMC minutes, GDP growth, and finally the inflation rate. And the Fed is really looking forward into those data because based on those data, he will understand what to do in the monetary policy. But I think such news are already priced in. So by the time we reach Thursday, Friday, or Wednesday, I think the price would already priced in the potential outcome from the news. So this is it. Also, the playbook is really simple on GU. See how heavy this price action was last week. This sell side is the first target. So maybe if I couldn't have something clear on the 12-hour time frame, I would wait for price to displace lower, and this area would potentially be my next significant area of interest just to target reprice lower. So see this area on the 6 hour time frame. It already, like the weekly close was already closing below um, those 4 or 5 candles over here. So this, ignoring the wicks, this had created a significant breaker, so, or mitigation block. Okay, so the mitigation between a potential fair value gap that's going to be created and a breaker block over here. So a break of structure, retracement maybe on Tuesday, and then a continuation to the downside. This is gonna be, depends on how the market opens, but this is the major plan. So I'm expecting a full resume of this potential, of this actual, this actual downtrend of GU, which could end at this sell side over here, which are those two relative equal lows. So let's see how the market opens, and based off that, we're gonna identify potential setups based on what the chart is gonna tell us. So last but not least is gold, and I still do think that gold's price action had been offering significant opportunities lately. And the last time I spoke about gold was the significance of this daily BPR aligning after the break of structure, closing below the sell side, and the 1 hour fair value gap that occurred in between this daily BPR, and clearly seeing how it was really significant. And ever since that moment, gold didn't have any single bullish day. Now, here's the thing. Gold kept on selling off until sweeping this sell side and this sell side. On the daily time frame, we saw some buying pressure over here. I called this an HBOS, which means an hourly break of structure. So it's on the daily we couldn't close below it, but on all of the hourly time frame we were able to close below it, and especially on the 12 hour, which is the highest after the daily, in my opinion. So is there more potential to the downside? I look into the monthly, and my eyes cannot ignore this huge monthly fair value gap which occurred between August and October 2025. So aligning with this like 4 or 5 months of liquidity. So this is really significant. There's really nothing important on the monthly apart from this. And we had the first bearish month of all of this bull market ever since this month over here of August. So March closed as a first bearish month on the on gold. So it's really significant and promising that we could see gold trading a little bit lower around this monthly fair value gap around 3,800. But it's really early to say something like this because like you never know. Especially nowadays, gold can turn bullish at any time, but the fundamentals and the technicals are aligning that gold can still correct lower and potentially reach this monthly fair value gap. Now, here's the thing. Within this sell-off, okay, let's assume that this is, okay, sorry, 1 second. Let's assume that, not assume actually, let's consider that this is a legitimate or confirmed break of structure on the hourly time frame, which means that this sell side has the potential to be filled again or repriced. Okay, same as what happened over here within this huge sell-off, but look how much the market retraced higher and then fulfilled the price over here. So we're seeing something similar. So huge sell-off, market retraced higher, and then potentially selling off back again to reprice this week over here. So where did gold reached last week? It reached a fair value gap aligning with this previous breaker over here. Okay, so this daily level, there's another daily level over here also aligning with those couple of breakers. This is why I'm taking my time. This daily high was already swept. Okay, now here's the question. If Monday opens, okay, knowing that Friday was the Good Friday and market was closed on gold. If Monday opens with a sell-off, I think that there's a very high probability for just taking continuation to the downside, targeting this sell side at least. But if Monday traded higher, then I'll be eyeing on a sweep of Thursday's high, or a potential balance to this daily fair value gap. So we balance all of the fair value gaps or imbalances within this push to the downside. I'm gonna show you on the 2 hour time frame how does this look like. So I'm gonna use this break of structure, okay, in case I saw the following: either a sweep of this high and a sudden break of structure, or even though we traded a little bit higher than this buy side, I'm gonna observe what happens over this daily fair value gap, which is very important. Okay, and let's say none of that happened, just a slight balance into this 2 hour fair value gap and a break of structure, then you can be using this breaker over here as a potential area of interest for a continuation lower. So overall, I am bearish on gold unless I see something like this, a potential displacement to the upside, just not showing any signs of weakness, and we're just trading higher. So I think in this case, price would need to sweep this buy side, or I don't know, we will see until then. But I think price is leaning or have high tendency to just continue the trend to the downside, knowing that gold nowadays is moving alternative to DXY. Okay, it's moving simultaneously with EU and GU. So when the overall trend in the market resume, here is where gold and silver resumes the trend. So it's gonna be a matter of time. I think first couple of days of next week we're gonna know the answer for gold, but I think there's an extreme edge in gold for next week. So with that being said, I hope you enjoyed this weekend, everyone. Enjoy your time with your loved ones again, and hope to have a great week ahead. This month looks promising with all of the volatility and momentum that we're witnessing in these markets. And yeah, that was it for this weekend. And talk to you next week. Thank you so much.